Hello and welcome to the 7th episode of the Investment Academy. In this series, we are learning about stocks, and till now we have covered basics of stocks, working mechanisms and fundamental analysis. In this episode, we will be learning about the technical analysis. So before I begin to explain technical analysis, you need to understand one thing. That is, there are a lot of investors in the market who do not consider the technical analysis and believe that it has no impact on the prices of the stocks. While there are a few who rely solely on the technical analysis for their investment and trading decisions. And there are a few who use a blend of fundamental and technical analysis to make investment decisions. So, I will explain you the basics of technical analysis. Of course, it is a very broad concept which requires a separate series of its own. But here, I will only explain what is technical analysis for beginners. So basically, technical analysis is the study of price movement over a period of time. Analysts read the historic price movement of stocks and indices to predict how they can move in the near future. Technical analysis is more useful for traders, but investors find it of little use. In fundamental analysis, the price of the instrument does not matter a lot, but the technical analysis is all about the price. The movement of the price at different time durations forms a pattern. These patterns can be studied to predict how the prices of the stock will move in the future. Suppose you wish to go for surfing, but you cannot just surf on any wave. You will see how high the waves are, their patterns and their intensity, and then you will go for the surf on that perfect wave. Technical analysis works in a similar way. The price of a stock at different times can be plotted on a graph. The time frame can be as per your preference. Most traders prefer the candlestick chart. Now, a candlestick represents price movement in a given interval. Suppose the candlestick chart is of 5 minutes. This means that each candlestick can show how the price has moved in 5 minutes. A candlestick has a body and a wick. Candlestick can be green or red, which shows upward or downward movement respectively. In a green candlestick, the lower part of the body represents the opening price in the 5-minute period, while the top end of the body represents the closing price. It's the opposite in red candle. The top part of the body represents the opening price and the bottom end represents the closing price during the 5-minute interval. The wick or the line between the body shows where the prices have moved during the 5-minute period. Multiple candles lined one after the other form a pattern that can be studied in multiple ways. There are thousands of patterns that are used by traders for technical analysis. Indicators like moving averages, RSI, Bollinger Bands, etc. can show some more data about the chart. Analysts also identify the support and resistance in chart through these patterns. The historical price level where the stock prices have bounced back can be the support and resistance level. The upper level or the ceiling is called the resistance, while the lower level or the floor is called support. We will be learning a lot more about technical analysis and candlestick in our series of options trading. So that was all about the basics of technical analysis. In our next videos, we will be learning about the investment strategies in stock market. Until then, happy investing.
Investments in securities market are subject to market risk. Read all the related documents carefully before investing.